Now in the part of the cycle which tends to be what I call the banana singularity, when things start to get really crazy. We've seen that with the Trump coin and whatever. What we're still missing is the massive liquidity injections that should come into the market from the central banks and governments. We've got the US will be draining what's known as the Treasury General Account, which is their checking account. That will increase liquidity significantly in the US over the next few months until they negotiate the debt ceiling. I think there is a broader deal that's going to get done with the dollar and China, and I think the US has been using the strong dollar as a negotiation point with China. China can't stimulate its broken economy right now until the dollar weakens, because if not, if they stimulate, they'll break the peg against the dollar, which they do not want. They don't want capital flight. So you need the dollar to come down, and then the Chinese can stimulate and help the world economy recover. The US knows this, and it's a tool for everybody. If Chinese economy starts to recover, they'll buy US treasuries. So we're at the really interesting point in the cycle where all the debt has to get refinanced, all the games have to get played, the dollar needs to weaken, rates will come down, and everyone will refinance their debts by adding liquidity. What does that all mean? All of the macro stuff, all it means is number go up. Liquidity is debasement of currency. Debasement of currency is the driver of crypto prices and all asset prices.
In this video, Raoul Pal, the global macro investor, discusses the impact of the money supply M2 and AI on Bitcoin, crypto prices, and global economy. Imagine liquidity flooding the financial system, an unstoppable wave driving up investments and sending crypto prices soaring to new heights. Raoul Pal is convinced that 2025 could be the year this happens, with the growth of M2 money supply at the core of it all. As M2 increases, liquidity follows, and we all know that liquidity is the fuel that powers markets, crypto included. Raoul looks back to 2017, when a similar surge in M2 triggered a massive crypto bull run. As money supply increased, liquidity flooded the market, pushing Bitcoin and other digital assets to unprecedented highs. Fast forward to 2025, Raoul sees the same dynamics playing out, but with even more explosive catalysts in the mix. What's different this time? Raoul points to a key factor: the Fed's move to drain the Treasury General Account, weakening the dollar and making it easier for China to stimulate its economy, and in turn, the global economy. On top of that, a pro-crypto Trump administration could bring with it policies that favor Bitcoin and the broader crypto market. With all these crypto-friendly regulations on the horizon, Raoul believes asset prices are primed for a major rally. Are we on the verge of another crypto bull market like 2017? Raoul's insights in this exclusive interview are mind-blowing and could completely change how you view the next few years. Don't forget to like, share, and subscribe for more deep dives into Bitcoin, crypto, and the future of finance. Your support helps us grow and ensures we bring you the best content straight from the minds shaping the future of finance. Thank you, and enjoy the video.
It all lies ahead this year. What's interesting is the discussion around when the cycle ends. So a lot of people have PTSD because of the last cycle, and that finished early. It peaked in April, went down 50%, up, made a new high, and then kind of just failed, right? That was driven by the fact that the business cycle, the ISM survey, peaked in March 2021. Why? Because we had that snap crash from COVID and then snap back up, and the business cycle peaked, as did liquidity. So the cycle peaked. So as it went down again, tried to come up again, but kind of failed because there was no follow through because the business cycle had peaked. This time around, the business cycle is actually still below 50, which is the slow growth zone, not recession zone, but slow growth. And all the forward-looking indicators say the US economy and the global economy is about to get a lot stronger. And so we're nowhere near peaking. In fact, we're only just bottoming. So the chances are that we might even go through all the way till Q1 2026. So I think we've got a longer cycle. I think it will almost certainly outperform the last cycle and looks more like 2017 to me, which, guess what, was a Trump cycle. And we entered the Trump cycle last time with tariffs and, oh my God, this and that. Rates were going up, and the dollar was going up. Trump came into office and immediately said the dollar's too high. The dollar came lower. China were also near recession. They had to stimulate. They spent the rest of the next 2 years stimulating. And that's what drove the crypto cycle in 2017. So we've got an incredible similar setup to 2017, which you were around for that one. It was bullish as hell. Yeah, but liquidity is the big daddy here. I got caught out by this in 2017. By about April or May, I sold out of my Bitcoin. I was up 10x because I bought it at 200. It was trading at 2,000. I'm like, it's a pretty good trade. I took the money off the table. It consolidated for a little bit. Then it went up another 10x into the end of the year. People can't understand this. It's like, you know, if Bitcoin went up 10x from here, and we're at $1 million. Now, I'm not expecting a 10x, but what I'm saying is people did the same thing then. And what happens is you sell out positions, the market corrects, and because liquidity is still the driver, everybody gets forced back into their positions, and that creates this violent end-of-year move. That's possible. I'm not saying it's definite, but you know, I think of improbabilities, and that's where my head's at.
We talked, and you talked about it a lot in the last cycle, the possibility of a super cycle. Now, when you question history, any trader will tell you, like, you know, history tends to rhyme. And when you start thinking like things will be different, it probably isn't. But I just think that's an oversimplification, because there is just so many factors right now that are bullish towards crypto, especially when it comes from a regulatory perspective. And we were talking earlier, the president launched his damn meme coin, so did his wife, and arguably his son did as well. Some people say Barron launched a meme coin. I'm not sure if it's true. And then his other sons have backed different coins as well. So when you put all these factors together, what's happening in the SEC and how bullish the current administration is towards crypto.
Has Amazon been in a super cycle? Yeah. Has Microsoft? Yeah. Has Google? Yeah. Have they all had massive correction periods during the downside of the 4-year cycle? Yes, every single time. So what you don't do is you don't get rid of the cyclicality. It's the compounding of returns over time. Now, the only change that I could say is possible, and I think is likely, is that the downside in Bitcoin is not as big as people expect, right? The free money trade is you try and sell out somewhere near the top, or even if you don't sell out, you're waiting for the dip to buy more. The answer is usually wait till it's down 70%, 75%, start buying, and you make a 20, 30x on that trade every time. My guess is it probably ends up down 40 and not down 75. And that will create a lot of complications for people who are waiting for the big leg lower. And people are going to get caught out, I think, in this cycle. Now, that doesn't mean all of the long tail stuff doesn't go down 90%. Of course it will. But I'm thinking about Bitcoin itself as the anchor price to this whole thing. I kind of am the impression of what changes is the downside is reduced in Bitcoin. So it's this incredible, fast, super high velocity, creative destruction cycle. You don't know what's going to be really valuable until the bottom of the cycle. The things that survive become the best trades. Solana, Ethereum. So Ethereum in 2019, absolute killer trade. 2018, Solana in 2022, absolute killer. So what you need to see is when those things go down 95%, everything goes down 95%. So now you've got all of these things at a discount. Your job is to find out what really has network effects, what is really powering an ecosystem. And what you'll find is a bunch of these are kind of dead chains because they were just using money from the foundation to pay for economic activity. But then you looked at Solana and there was a ton of developers building. The community was like focused. Tolly was a good leader. You're like, okay, there's signal here. So I like the cyclicality where you wash out all the bad ideas. People are testing innovation. And that's good, right? It's a lot of innovation. You do VC, tons of VC things go to zero. But if you get the right ones, they don't. You can make a lot of money out of them.
The world is on the brink of an AI-driven revolution, and Raoul Pal believes we have just 5 years to make all the money we need before everything changes. By 2030, AI will have reshaped the global economy, boosting GDP despite massive job losses. But here's the twist. While automation will replace millions of jobs, AI will supercharge production, driving efficiency like never before. Where does crypto fit into all this? According to Raoul, Bitcoin and digital assets will become the strategic backbone of financial inclusion. As AI integrates with blockchain technology, crypto will serve as the key to a fully digital economy, allowing seamless transactions across the world. For those who position themselves now, Bitcoin and crypto could be the ultimate escape route from job redundancy and financial uncertainty. Raoul warns, the job market is already shrinking. Those who fail to adapt will struggle. But for those who move strategically, leveraging Bitcoin and crypto, the opportunities are massive. AI may disrupt, but crypto empowers. So is this the greatest wealth shift in history? Or a ticking clock counting down to financial chaos? Let's dive into Raoul's insights.
What is about to come is agents that process information themselves and make decisions themselves. The autonomous agent thing is much bigger. So you would then say to an autonomous agent, I'm looking for 50% return over the next 3 months. Find me the best strategy. And that, I don't know whether we're going to get that or the AI companies. Somewhere within this, I just don't know that we're going to have an opportunity to make any money. I talk about this thing about after 2030, we get to the economic singularity. And one of these is this point, is the closer we get to artificial superintelligence, the less there is for money, corporations, anything, or financial markets. You can't outcompete ASI. There's no trading to be done because it knows pretty much everything. Now, that's not today. It's not in 2 years' time, but it's almost certainly in 5. So this concept of an economic singularity is where we're headed. We don't know how the economy works. We don't know what jobs are. We don't know what markets are. We don't know anything. And we're going to go there and we're going to find out. Of course, crypto and AI are coming together. We know that. And this is the experimentation phase. We know that too. But you're right. What is coming is beyond what everybody on crypto Twitter is talking about. You know, right now it's like macros and Telegram chatbots. Telegram bots is what we're really building at scale. What is coming is self-thinking creatures. But more important is this 2030 date. Now, it's not a fixed date. It could be 2032, could be whatever. Is, as you rightly said, well, what does that mean? And the answer is, and I spend my whole life looking into the future, the answer is we don't know. What does it mean when people are replaced by robots and AI? And everyone goes, well, jobs and blah, 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 universal basic income. I'm like, no. Think about GDP growth. The growth of economies is driven by population growth plus productivity growth and debt growth. You replace this aging population that's been slowing our economies and increasing our debt. This is the aging population across all the Western world and China and Japan. And old people are less productive, so economies are slow and this debt burden's hard to deal with. You're going to replace those with infinite people. Infinite human knowledge and infinite physical beings. AI can go much faster than that because it's infinitely scalable, unlike the robots, which takes time. So we're talking about, we can have billions of new economic participants in the economy. So economic growth is going to go through the roof. And then at the same time in productivity, because we've got all of the AI and all of the knowledge and everybody's working on lowering the cost of energy for compute, we will lower the cost of energy over time, and that becomes another multiplier. So what we've got is an economy that could grow 30% in a year. Dollar land. So it's a really simple thing. Invest in your own demise. Just buy crypto and tech. Make as much money as possible. And I'm here in Little Cayman, a small island of 140 people. The fucking robots aren't coming here. There's nothing the tide comes in, the tide goes out. The sun goes up, sun goes down. nothing matters. So nature is going to be the single most important thing you're going to have to focus on, because it'll be your way out.
That's a wrap. What's your take on Raoul Pal's insights on the next bull run, liquidity, and AI's impact? Are we heading for a revolution or a wild ride? Drop your thoughts in the comments. And if you enjoyed this, don't forget to like, share, and subscribe for more deep dives into Bitcoin, crypto, and the future of finance. Your support helps us grow. Thanks for watching, and I'll see you in the next one.